Ethereum welcomed its new Layer 2 solution called Ethereum R1, and it's not your typical L2. There is no token, no VC backing, no governance coin. This is a rollup that says, let's keep Ethereum pure. R1 is entirely donation-funded and built to act as a neutral, decentralized extension of Ethereum itself. The team behind it believes most L2s today are acting like separate Layer 1 blockchains, with private allocations, centralized control, and a lot of token hype. R1 flips that script. What makes this moment even more important is the backdrop. Ethereum's base layer revenue has dropped dramatically, down 99% from the highs, because L2s are getting so cheap after the Denken upgrade. Transaction fees on the mainnet hit just 16 cents in April. So as users flood into L2s, the question is, are we scaling Ethereum or slowly abandoning it? That's what R1 is here to challenge, by stripping out the financial incentives and returning to a values-first approach. It wants to prove Ethereum can scale without compromising what it stands for. No governance tokens, no speculative games, just an open, neutral infrastructure that anyone can use. It's not competing with the big players like Arbitrum or Optimism. It's carving out space for developers who want to stay grounded in Ethereum's roots. On May 1st, Sky proposed its final upgrade, swap MKR for the new SKY token, enable staking, and move forward with a clean slate. If the DAO votes yes, this shift becomes permanent by mid-May, and going back to MKR will be impossible. Co-founder Rune Christensen calls this a huge milestone, especially since the MKR fallback has kept exchanges cautious. Now Sky wants to accelerate the switch, with a catch. Starting in September, late movers will lose 1% of value when converting MKR to Sky, and that penalty grows every 3 months. The upgrade brings staking into the mix too. Sky holders will soon earn revenue from Sky's new stablecoin, USDS, which already has over $4 billion migrated to it. DAI, the legacy stablecoin, still holds $3 billion, but Sky expects to slash all fixed costs by year's end. That means more profits can go to Sky buybacks and staking rewards. It's all a part of Sky's endgame plan, breaking into sub-DAOs like Spark and expanding USDS across major chains like Solana and Base. If this goes through, it'll mark the end of the Maker era and the rise of Sky as a leaner, more aligned DeFi force. The UK is taking a hard stance on crypto risk, and it's about to impact how regular people invest. The Financial Conduct Authority, or FCA, proposed a ban on retail investors borrowing money, like using credit cards or loans, to buy crypto. Why? They are worried about people racking up debt based on assets that can swing wildly in value. According to the FCA, the number of Brits borrowing to buy crypto has jumped from 6% to 14% in just 1 year. According to the FCA, if prices crash, people may be left with debts they can't repay. The regulator says that this is about preventing unsustainable debt, especially in a sector that's still largely unregulated. This comes just days after the UK government announced plans to bring crypto fully under legal supervision. The new rules would also restrict retail access to platforms like Celsius, yes, the one that imploded in 2022, and apply much stricter protections unless users can prove that they are seasoned investors. Sam Altman's crypto project World is integrating Circle's USDC and the latest version of the Cross-Chain Transfer Protocol, or CCTP V2, to power fast, seamless global transfers. Up until now, users on World Chain have used bridged USDC for remittances, especially in regions like Buenos Aires and Busan. But soon, these bridge tokens will be swapped for native USDC, fully backed, fully regulated, and far more liquid. That's a huge upgrade in terms of trust and performance. And thanks to CCTP V2, moving money across chains will reportedly become even smoother. Lower fees, fewer delays, and more interoperability. This isn't just a back-end upgrade, it directly impacts people sending money to families overseas or workers getting paid in crypto without losing chunks of value to middlemen. Meanwhile, World ID is also going live in 6 US cities, drawing more eyes to the ecosystem. The native WLD token has been trending up 6% over the past week, with some traders betting that these new integrations could fuel a serious rally. Binance dropped its 17th project on the HODLer airdrops portal. StakeStone, or STO. But what exactly is StakeStone? At its core, StakeStone is trying to reshape how staking works for both ETH and Bitcoin. It's an omni-chain liquidity asset protocol. Basically, it wants to make ETH staking more rewarding and unify fragmented custodial Bitcoin assets across blockchains. That means you'll eventually be able to use your staked assets more flexibly and efficiently no matter what chain they're on. StakeStone is already integrated with over 50 StoneFi protocols and has more than 100 partners, including Binance. Its mission is better staking yields, better capital efficiency, and seamless liquidity across chains. Binance's HODLer airdrop for STO will distribute 15 million tokens to users who held BNB through the simple earn or on-chain yields from April 27th to April 29th. That's just 1.5% of the total 1 billion STO supply, with another 15 million set aside for future marketing. The token's already listed on Binance with trading pairs like STO USDT, STO BNB, and more. But a heads up, it has a seed tag, which means it's a new project and could see higher volatility than other tokens. Ripple is going big. Like $20 billion big. After a lowball $5 billion offer to acquire Circle got the cold shoulder, Ripple allegedly came back swinging with a revised $20 billion bid. According to Bloomberg, this would be a massive play to take over the issuer of USDC, the second largest stablecoin in the world, with over $60 billion in circulation. Why the sudden interest? Ripple's own stablecoin, RLUSD, hasn't taken off since its December launch. It's currently sitting at just $318 million in market cap. Buying Circle would instantly give Ripple major scale in the stablecoin space, especially since stablecoins are becoming central to cross-border payments, Ripple's bread and butter. This bid also comes right as Circle is preparing for a confidential US IPO. If Ripple pulls this off, it could throw those IPO plans off track. It's also worth noting that Ripple's legal battles are finally easing. After years of clashing with the SEC, Ripple settled for $50 million in March. That's right around the time CEO Brad Garlinghouse had high-profile meetings with Donald Trump, who is now back in the White House and openly pro-crypto. Ripple even contributed $5 million to Trump's inaugural fund, hinting at a closer alignment with the new administration. If this acquisition goes through, Ripple could shift from a blockchain infrastructure player to a major force in the digital dollar space. Tether CEO Paulo Arduino revealed that the company plans to launch a US-focused stablecoin later this year or early 2026. But this won't be another version of USDT. It will be a brand new product aimed squarely at the American financial ecosystem. USDT is huge globally, especially in emerging markets where access to dollars is limited. But in the US, Tether wants something different, a stablecoin that could directly compete with apps like PayPal and Cash App. Think faster payments, easier integrations, and institutional-grade reliability. Arduino said that the launch depends on stablecoin legislation in the US, which could be finalized soon. And with Donald Trump back in office, regulatory pressure on crypto firms has noticeably cooled. That shift is giving companies like Tether more confidence to roll out US-centric products. Tether's also been cozying up to Wall Street. Cantor Fitzgerald, a major investment bank, now manages over $100 billion of Tether's U.S. Treasury holdings. Plus, Cantor's former CEO, Howard Lutnick, is now serving as Secretary of Commerce under Trump. With new regulations coming and the stablecoin market expected to hit trillions by decade's end, this U.S. launch could be a game changer for Tether.